wealth inequality surges. Let's have a look. Good morning, everyone. I'm Florian Heiser, and welcome to another episode of Heiser Says. I thought today we would look at this article from Brisbane Times discussing really the surge in household wealth for the wealthiest households and the fact that the lowest income households in Australia have pretty much remained stagnant in their wealth for the last decade. Now, from my perspective, I'm wondering if the trickle-down effect in our economy might stall at particular levels due to just the sophistication of our economy and the inability of those on the lower rung, the lower socioeconomic rung, being actively able to take advantage of maybe the stock market or maybe the bonds market or investing in particular things, just because they don't have access to the technology. I'd like your opinions on that, because it's something I'm trying to get a better understanding of. So let's have a read through this article. So the wealth of the average Australian household has surged past $1 million, but low-income families have not seen any increase in their net worth for more than a decade. Now, the first thing that springs to my mind is this surge is due to the bubble in our property sector. So, is it good if you're of course you've gone over $1 million, but those of you that are renting may not be able to have that increase in wealth. It takes a bit of effort to liquefy a house into, that $1 million. And just because it says so on the piece of paper may not mean that it actually is, and may not be what you get when it hits market. So, despite a record 28 years of uninterrupted economic growth, new figures show debt has outstripped national incomes for the first time. Fewer than 30% of workers own their home outright, and 1 in 3 homeowners are in mortgage stress. Wow, these are terrible things to be talking about. Just they're signs of some systematic failures. The story of the economy's increasing wealth disparity has been revealed by the Australian Bureau of Statistics, with the gap between the asset-rich and the income-poor at its widest in decades. Now, why should we worry about this? Because it can lead to social issues. So wealth. Every 2 years, the ABS surveys thousands of Australians on their income and wealth. It divides households into 5 groups, from the lowest 20% by income or wealth and to the highest 20%. There are about 2.1 million households in each of the 5 categories. So these are the 5 sections of our economy here. You can see here over time from 2003 to 15, 16, the wealthiest households have shot up, and the middle part of our economy is slightly increased, the middle class, and as we're going further, the improvement is like nothing at that level. So, this is interesting, isn't it? What it's telling me is that there's certain, either people's wealth increase is brought on by the property bubble, and maybe it's not as realistic as we think, or that you have to be at certain levels, education, access to technology, to take advantage, and intelligence, to take advantage of the economy that we have. The survey shows the high wealth households increased their average net worth from 1.9 million in 2003 to 2004 to 3.3 million in 2017-2018. 3.2 million. Over the same period, middle wealth households increased their average net worth by 148,000. See, I'd like to see this as a percentage, and it's too early in the morning for me to figure it out. But low wealth households have not experienced any real increase in net worth. Their average net worth of $35,200. Wow. The net worth. This is the net worth of the entire household. In 2017-2018, less than 1,000 higher than in over a decade, is equivalent to less than 1% of all household wealth in Australia. Wow. The disparity has been driven by increases in superannuation balances and the housing market. There you go. So both of these things may make you feel wealthier psychologically, but sure, you can leverage your housing, you can, and you can borrow against super and invest in other things, but these are things that the bottom 20% wouldn't even have exposure to, probably. Their super balances will be tiny and maybe eaten up by fees, and they may not even be in the housing market. So, I mean, none of these things are they leading to increased manufacturing, increased employment opportunities? Yes, no. So pushing the average household wealth past 1 million, as I say. The wealthiest households still more than 60% of all household wealth, while the middle fifth control 11%. The ABS reported that wealth inequality increased over the past 2 years and is now at its highest level since the survey began in 93-94. Income. As the asset-driven wage gap has widened, incomes generated by employment have failed to keep up. Average weekly disposable household income has grown by just $44 over the past decade. That is insane. Average weekly disposable household incomes have grown by just $44 over the past decade. 10 years. 10 years. What does that tell you guys? Damn. In the 4 years to 2007-2008, average weekly household income grew by $220. They dipped in the immediate wake of the GFC before reaching $1,067 in the 2013-2014 survey. They fell the following survey and lifted by just $8 a week to $1,062 in the 17-18 survey. In New South Wales, those in the lowest 20% of income earners have actually seen their incomes go backwards in real terms since 2015-16, falling from $412 a week to $397 a week. They are only $6 a week higher than the 2011 to 2012. Well, there you go. That's depressing, really. That is really depressing, showing how little of the growth has gone to the bottom 20%. Or what that is telling me, how I'm reading this, is that the increase in wealth is paper. Is paper, or it's not in anything. I'd like to look at our economic production capacity, what we're actually manufacturing and exporting. There's no complexity to our economy. I mean, I'll bring it up. Hang on, let me just bring it over here. We'll look at the complexity of the Australian economy. I mean, guys, we're sitting at, 59th of the world. Our economic complexity is shot up. At least we've got a trade surplus from our exports to our imports. But what are we talking about here? Iron or coal mining sector is a huge part of that. Is a huge part. And look at everything that we're importing in. And even, sure, these are great big parts of our economy, but how many people do they employ? How many people in the bottom 20% have access to a lot of this or to different sections of the economy? How can we address that through government policy? These are all questions I'm just asking. So, Victoria has done better at maintaining income growth across the economy, with all incomes rising. But those in the middle 20% are only $1 better off than they were in 2013-2014. The biggest increase has been for people in Tasmania, where disposable incomes jumped by $83 to a record high of $922, with households across all income ranges getting a boost. So, we're going to have a look here in Victoria. I mean, there you go. The largest slump has been in Western Australia, where disposable incomes are $157 lower than their peak in 2013-2014, when the state was in the midst of a mining boom. Overall, the richest households continue to be in New South Wales, with its top 20% earning almost $300 more per week than their southern neighbours. The figures are likely to continue to fuel the debate around Australia's tepid wage growth, non-existent wage growth. The passage of more than $300 billion in income tax cuts since the data was collected will help most income earners in the short term, with a 1080 tax boost due from July. But by 2024, the largest benefits will flow to higher income earners through a flattening of the tax system. Yeah, I've got no problem with that. It's because the bottom part of the 20% They're probably not paying any tax at all. They're probably not paying any tax at all. Home ownership, a key element of Australia's wealth, and into which goes a large proportion of income, is a home. But the survey reveals home ownership is at its lowest levels on record. Yeah, well, housing affordability is insane. So, in the 95 to 96 survey, almost 43% of those quizzed owned their homes outright, while 28.3% were paying off a mortgage. So, home ownership has fallen in every ABS survey since. Have a look at this. The red is home ownership without a mortgage, over 40%, over 40%. It's under 40%, under 40%, under 35, under 35. Oh, under 30. Yay. Yay. So that's trending. Oh, look at that beautiful chart drawing there. That's trending down. And ownership with a mortgage, how's that going? That's trending up. You know, what about rents? Total rentals. How's that going? Maybe you could say it's slightly starting to trend up with my super accurate chart drawing there. You can see why I'm not a day trader with the charts, guys. So, in 2017-2018, with house prices in Sydney and Melbourne at record highs, the proportion of Australians owning their home outright fell below 30% for the first time. The proportion holding a mortgage is at 36.7%, slightly down on 2015-16, but still the second highest rate in the history of the survey. So what would happen if our interest rates, remember now we've got a third, 30% of people are suffering from stress, from mortgage stress. What if our interest rates kick up above, the cash rate? What if it goes above that 1% that it's at now? I'd like to see the next result from the DFA's survey on mortgage stress to see if these cuts have actually reduced that number. I hope it has. I really hope it has. So another 32% are renting, an all-time high. Rent in almost every capital city has either fallen or barely climbed since the survey was conducted, suggesting the rental population may have grown even further. Since 2009-2010, in the immediate aftermath of the GFC, the proportion of people owning their own home has fallen by 10%, while the proportion renting has grown by 11%. Renting doesn't seem like such a bad idea these days, or getting into the housing market now. Maybe holding off a bit and renting for a bit longer to save some money and see what happens. Maybe the smart thing to do, honestly. Renters are also increasingly likely to be reliant on the private market for the home. In 94-95, 5.5% of people were renting through a state government agency, what with another 18.4% having a private landlord. By 2017-2018, the state agencies were renting to 3.1% of the population. A record 27.1% of people were paying rent to private landlords. Well, isn't that interesting? Now, this is why you've got that inequality right there. It's just more people are buying houses and their wealth is going up because they're leveraging the capital, the equity from one house to invest in another. So they're just riding the wave. They're riding the wave that's coming in. The worry is when the wave crashes. When the wave crashes. That's the concern that a lot of people are talking about. We're starting to see it in certain places too. And then, what will happen? Maybe then prices will fall and more people will enter into the market and start to own property. We'll see. The lift in renters points to possible long-term effect on the wealth of many Australians. Well, yeah, that'll be intergenerational, perhaps. Property dominated by owner-occupier houses and units accounts for a quarter of assets of low-wealth households. Just 5.5% of low-income households actually hold property. Well, there you go. That's what I was saying. It shows you how little of low-income houses actually own or hold property. Right there. And that has been a pathway, or super and property, as they're saying, has been the pathway to a lot of this wealth growth recently. So, and I mean, if you're not even holding property, how many would you imagine are actually exposed to the stock market or investing in there or investing in bonds? How many of them you think have got term deposits? So say we start pushing for QE here in Australia and they're printing out money, figuratively, and where's that going to flood into? A lot of it floods into the share market, a lot of it floods into bonds, or bonds will go up because they will be bought up, but who will that affect? Who will that improve? It'll improve the superannuation holdings for a lot of people and the private people who own shares. So, among middle and high wealth households, property ownership is more than 94%. Well, there you go. Property accounts for 57% of the wealth of middle income Australians and 35% of high wealth people. So there you are. That's showing you a lot of this growth is fueled by this surge in property prices right there. Debt. Australians are holding more debt than they are earning in income for the first time as record numbers of households battle supersized mortgages. The Bureau found that in 2017-2018, the median debt-to-income ratio hit 110%, or $1.10 in debt for every dollar of income. Not good. Not good. Look at that chart go right up. After holding steady following the GFC until 2013-14, median debt-to-income jumped by more than 20%. It coincided with the sharp run-up in house prices, particularly in Sydney, Melbourne and Hobart, as households without solid income growth resorted to loans from the local bank to buy into the property market. One thing that'll be good, if the property market adjusts and we have it decreasing in value, which I'd say it already started, all these brilliant people that you see all over Facebook that just rode the wave and bought one property after another. I have 30 properties. I'm mortgaged to the hilt, and if the interest rates increase, I'll be complaining that I have to sell them. But, join my webinar to learn all my secrets. So maybe we'll see less of those ads. What do you reckon? So while total debt levels are up, the proportions of Australians holding extreme levels have reached new high. Extreme levels. I think I need to look into this a bit more. If anyone can recommend some good references, that'd be good, into just how much debt Australians hold. More than 30% of the poorest households are carrying debt 3 times their income. A decade ago, the proportion was less than 23%. But it's not an issue confined to those with low incomes. The proportion of high-income households with the same level of debt has also reached a record high of 29.5%. Across all income groups, there's been an increase in high levels of debt, particularly since the takeoff in the property market in 2011. In the past 2 years, there's been a near 5% increase in the number of high debt households. Oh boy, well look here. Households with debt 3 or more times their income. Will be over 28%. That's a lot of stress to deal with, isn't it? That's not good. The major source of debt is property. Among high wealth households, property loans account for 90% of their debt, with almost half having a mortgage of some type. 57% of middle income households have property loans, which account for 93% of their total debt. Low income households are less likely to have property debt, but more than a quarter of their outstanding loans are for university or vocational education. Bugger. Is that HEX debt? I'm hoping that's HEX debt, because at least HEX is, the interest rate. Actually now mortgages are catching up to HEX debt because they've gotten so low. But it was at the cash rate, it was at inflation rate, like pegged at 3%. I wonder if it'll go down. I better check my HEX. So while debt is up, the total proportion of Australians in HOC has not changed and remains at just above 72%. In one area, Australians have tried to keep on top of their debt issues. Between 2003 and 2004 and 2017 and 18, the average credit card debt lifted from $3,500 to $4,400. Among low-income households, credit card debt was largely stable at $1,900. Well, that's fantastic. That's actually some good news. If it's been stable over that period, that's a really good sign. That fills me with, but then again, that's just credit cards. Where's it? Well, if the debt's just in university and vocational education and not in the credit cards, at least that's a lower rate, and that's the payments of that are related to your income, so that's not as bad as this. Here in Australia, with our higher education system, we've got the HEX system. You pay a proportion of your education in HEX, and then it's your payments, repayments of that as a student loan. Your repayments of that are paid back to the government over a period of time, depending on your income at the end of the financial year. So it's much more manageable than what the States has. It's much more manageable. It's a good system, I think. Keeping up with debt is proving a major issue for households. While total households' equalized annual income climbed by $728 between 2015 and 16, total liabilities rose by $9,000. Well, there you go. There you go. So, guys, this is very interesting. Oh, wait a minute. You can't see. I don't think haven't shrunk this image here, but you can see it here. Households with debt 3 or more times their income. There you go. That's high. So, guys, what do you think about all of this? Is this just a sign of things to come, showing where the economy is going? What's going to happen to all these people that have built up all this wealth in the property sector if we have a housing crash? If the housing market continues to slide? If what happened in Ireland happens here in Australia? What's going to happen? You know, I mean, in the end, guys, it's just money. It's not really that important to your life in the end of things. You need to look at it in perspective. If you're happy, it doesn't matter how much or little you have. If you're healthy, it's even better. So yeah, sometimes taking a cut in pay and living a healthier and happier life might be the smartest thing you could ever do. And you know, I'm seeing some comments from people who've kind of cashed out of the cities, gone to countries, sold a house, bought something cheaper, living a much happier life. Much happier. Anyway, guys, let me know what you think about all of this. It's the good news, the good takeaway from this is that the credit card debt has not increased for the lowest 20%. That makes me happy, because that's what was worrying me. If that debt shot up over that period and then you see everything else affected, that's a worrying sign. Anyway, guys, thanks for watching. Like, share, and subscribe. Let me know your opinions in the comments, and I'll see you next time. Bye for now.